Equity markets are resuming up and the euro is finally starting to bound. We believe this sets the stage for some kind of a growth extension over the next few weeks, possibly into June. And then, following from the summer, we expect equity markets to start to roll over, probably for the rest of the year. We will look at this on our fin graph charts, and we'll first start with the S&P 500. Here it is, the mini S&P future on a weekly basis, and it gives the perspective over the next few quarters. What we could see is that we're still on an uptrend, but that this uptrend is quite exhausted. Both our envelopes are touching each other, and we've reached our impulsive targets up, and our targets are labeled impulsive up done. Our risk index is almost overbought, as it is almost in the red band here. So we believe that although the S&P could continue slightly higher, it is slowly going to turn during the year. Now we move to the daily chart or the perspective over the next few months. We are still in a bear trend for now on our charts, but we believe that the price action over the last month and a half is very constructive. At the moment, it is still seeing our impulsive targets down, and I think this highlights the risk of a correction, possibly towards the second half of the year, and a correction that could lead us below 2,500 and possibly down to 2,400. That said, over the short term, we believe we are resuming up, and that this move could probably last into the month of June. And as we could see, our risk index, which was very overbought in January, has come down and is now attempting to turn up again. We could see it more on the hourly chart, which is back in an uptrend. It is moving up, a bit of exaggeration here, but we will still have the potential to move back up in the lower 2,700s over the next few weeks. Our risk index is moving up, but it's not quite overbought yet, so we believe that there's more potential to the upside. If we combine all three charts, we believe the weekly graph, the long-term graph, is pretty much extended, but we cannot exclude one last move up. The daily graph is quite negative, but it's probably going to see an intermediate correction to the upside over the next month or so. And the hourly is trying to resume up and could possibly almost reach its previous highs and possibly even retest them. Now it's interesting to also look at Europe, which has been much stronger over the last few weeks, and we could see this is the Euro Stoxx future, and it is heading up, and it could probably continue to do so until the summer. We can see that our targets still extend above 3,700 and possibly even towards 4,000. Our risk index is heading up and is not quite overbought yet, so there would be still some leeway to move higher. The daily graph has had a very strong rally since the end of April. It was very much oversold at the time. We see the initial signs of exaggeration with both our envelopes touching each other, but we could still see quite a bit of potential towards 3,700, 3,800, and our risk index is still not overbought. So we believe that in here, on the Euro Stoxx 50, there's still some potential, possibly until mid-year or the summer. That said, short term it looks a bit extended. We've reached our impulsive 2 targets in the 3,500, 3,075 range, and we could also see that our risk index is quite overbought and it is now in the red. So we're still moving up on the Euro Stoxx 50, possibly into the summer on both the weekly and the daily graphs, and the hourly does look a bit extended for now. Now, one explanation to try to sort out the discrepancy between US and European markets can be found in the euro. Indeed, the euro has been fairly weak over the last few weeks, and that has given a strong boost to European markets. Now, we believe the euro is probably reversing on our long-term graph, and that it will probably move lower at least into the fall and possibly into next year. We can see that it moved up from its December 2016 lows to reach the resistance of our corrective targets up around 125, and that this resistance seems to be working quite well to contain a higher move in the euro-US dollar price. Now the daily graph has started to correct and did accelerate down over the last few weeks, yet it has now reached our corrective down targets and its lower end around 118. We believe that it's going to now act as support and that it could fuel a rebound to the upside over the next few weeks for euro-dollar. The risk index is still falling, so we would believe that this is just an intermediate correction, but we could still see a few weeks of this rebound to happen. Now the hourly was quite well oversold in our risk index. Our envelopes which had touching each other and we had reached our impulsive targets down. And so we're now getting ready to confirm this reversal and probably move up possibly until early June. Now if the euro is strong, it's usually quite good for all the growth themes, and one example we could show is the Nasdaq 100, and we believe the Nasdaq 100 may see one last period of outperformance versus other markets. Now we could see that on this weekly graph it still extends up quite aggressively, possibly above 7,350, and that we could even move higher if our impulsive 2 targets are correct. That said, the time frame is not very long because the risk index is already quite overbought on this weekly chart. On the daily graph, we actually saw an exaggeration position in March. We've since seen a correction. We've reached our corrective targets down, and we are now starting to resume the uptrend. We believe that this move could probably last into the month of June until the Nasdaq becomes overbought again. Now on the hourly chart, we could see that we're moving up quite quickly. We've pretty much reached our targets here, although there's a bit more to go. And our risk index is slowly getting overbought. So ideally, we would probably see a week or so of a flattish consolidation, and then this last move up accelerate into the beginning of June. Now it's also interesting to look at the Nasdaq versus the S&P 500, or the growth thing versus the general market. We could also see here that on the weekly the move looks quite extended, so any further move up is probably not going to last very long. We could see that there's a bit more leeway here on the daily to move up, and slightly more on the hourly. So although all these look a bit extended, we believe that there is room for a last move of outperformance of the Nasdaq versus the rest of the market. And again, we believe it could happen until the month of June. Now it won't last forever, and we wanted to show another sectorial chart and showing consumer staples, which is a very defensive sector, versus the S&P 500. And what you could see here is that it's still bearish on all 3 time frames, weekly, daily, hourly, but on all 3 of them we're getting towards a point where its underperformance is getting very exaggerated to the downside. So any last move up on growth themes will probably not last very long because defensive themes are probably going to start making a comeback. And we believe that could happen at the latest towards mid-year. And this should, in general, underpin a more widespread rotation during the summer towards defensive assets. Thank you very much and have a very good week.